Good afternoon, everybody. Welcome to Sunday Afternoon Coffee and Stocks. Got a lot of regulars in here. Thank you for being here. Really appreciate it. It's going to be a special episode today. Special episode. So, before we get into it, please take a moment and read the disclaimer. Pause the video if you have to. I do not know your financial situation, nor does anybody else that will appear on this show know your financial situation. Do not make any investments because you hear somebody talk about something. Always do your own due diligence. Once again, I am not a financial advisor. I just happen to do a lot of research. This is for entertainment and educational purposes only. So, thank you very much for reading the disclaimer. Really appreciate it. Well, I got to tell you, I love the comments. You guys are great. Cookies and milk. Love the love it. Love it. I know markets are closed. Got to get ready for the end of the year. Got to get ready for our special guest to come on. Don't worry, the markets will be open in less than 24 hours. Whoa, we have somebody that is fishing and listening. This is crazy. Amazing. June Ray, thank you for being here. Melanie, thank you for being here. Rusty, Missy Ledger, thank you everybody for joining. Really appreciate it. So hopefully everybody had a good night last night. Hopefully everybody finished their Christmas shopping. Hey, there's Spencer. What's going on, Spencer? So hopefully everybody got through their obligations and they don't have to do any last minute shopping and deal with last minute craziness at the stores. I am finished with my shopping, thankfully. And I got to tell you, I don't know how I landed this interview, okay? I don't know how I landed it. This guy's been blowing up. He is the White House's favorite quant and favorite financial streamer. We are all lucky to have him here with us today, Mr. Matt Money.
Steven, how we doing, brother?
How does it feel to be the White House's favorite streamer?
You know, Barron reached out to me. No, he didn't. But no, it's funny, man. It's a very interesting story. I've had to tell it like a million times to everybody that I know. So it's been quite a ride, but it's excited to be here, man. I'm glad I'm only 3 minutes late. I looked down at the timer. I'm on East Coast time now, and it was 2:55, and I was like, oh my God, I have to go make my coffee for Steven.
I think the real question is, when are you changing your handle to White House Matty?
I prefer White House Quant.
White House Quant. Okay. When are we getting a title change?
I don't know, man. I'm just me.
I mean, I got to tell you, this is pretty crazy that we landed an interviewer at Real Matt Money. I mean, he's fresh out of the White House.
Dude, you heard it here first. East Coast.
Fresh off the news feed. I mean, they loved what he was saying so much that he ended up on the news feed. And Bloomberg covered it.
Every day I try to be more like you, Steve. That's all I know.
Did Bloomberg call you?
Yes, I did talk to Bloomberg. I talked to AP. I was supposed to message the Daily Mail today, and I did not. So I need to message them back.
Are you serious?
Yeah. I'm not joking.
And what did they say?
Which one?
Yeah, any of them. What did they say?
Oh, they just asked the basics, right? Like, what happened? Do you know what happened? No, I don't know what happened. And they're like, what else did they say? I forget the questions now, but they were like, the Bloomberg asked me if I support Donald Trump. And so I think they twisted my words a little bit there. I think the AP article, did a better job. because I a little bit more prepared for it because Bloomberg kind of caught me off guard right in the middle of the morning because it was a UK reporter that grabbed it. But Michelle Price from AP is the one that called me, and she had a little bit better of an article to kind of to write basically about like me joking around and things like that. So it was a lot more personality in that one versus I think the Bloomberg one. I think I don't want to say it was trying to get me or anything like that, but they kind of didn't articulate what I said or perceive things that I said in the way that I would like to have had them presented.
So, for those of you who are unfamiliar with what we are talking about, okay, somehow Maddie finagled his way on to the White House live news feed. Mystery video stream appears on White House website. Titled, "This time I give Steve a link."
Because Steve keeps inviting me to his live streams and then waiting until a minute before we go live to give me the link. So I've been trolling him.
And this is from Bloomberg Business, okay? And it looks like they're all reaching out to Matt. Now, are they actually doing articles on you about this?
There's follow up. So like I think the original like things were specifically around the incident, and then the people that have reached out updated it. So if you look at like Bloomberg or the AP article, it has now my commentary and stuff like that for the questions that they asked me. So
that's amazing. Absolutely amazing.
Yeah.
So did you tell them Rocket Money all the way?
No, they didn't ask particularly about any stocks. I wish they did. But I'll try. I was talking to a buddy, and I'll try to. I told the lady from the Associated Press, Michelle Price, who does a pretty good job actually. I looked at some of her tweets. She does a good job. She's a little bit more interactive with the White House than I'd say maybe some other reporters. So I want to keep in touch with her. But the people from Bloomberg, I'd like to follow up with them and actually like get on Bloomberg and like a few other things. Like this might be a good avenue for me to keep the brand alive. You know.
Well,
get Matt Money out there.
Let's just say that the brand is alive and well.
The shepherd for the retail investor, which I've been made fun of before for calling myself the shepherd for retail investors, but I have a lot of other people reaching out to me to be like, "That is awesome. Keep that up." So I'm glad I never changed it.
Yeah. So I guess we have to refer to you as the Shep.
That's what people are saying now. I think it's funny as hell. The Shep.
I like it.
Steven is my financial advisor, but he's not a real financial advisor. So always review the disclaimer at the beginning of every new episode for Hot Steve.
Yeah, I am nobody's advisor. I'm not even my own advisor. I don't even take my own advice. Okay, so
no, you don't. You don't, because Friday opened and you never ended up even buying VG, or what was the other one you were supposed to buy?
No, I am going to buy those
because you're shook.
I'm the shookest.
You're the shookest.
The absolute shookest. So, Matt, what would you like to talk about today? I mean, you're the one that made on the White House feed. What insights do you have for us?
Oh, man. Good question. I feel like if I'm going to be looking down at this laptop, I should be moving this down so that I don't maybe I'll move it down a little more. I don't want to feel like I am not, you guys can't see my eyes when my hat's down. What I want to talk about? I don't know, Steve. I'm just excited to be here, drink some coffee with you.
I mean, coffee on a Sunday afternoon, nothing better, man. Nothing better.
Excited to be done for the year. I can focus, get myself prepared for 26. I'm at the beach. It's a great time.
You're at the beach in the wrong part of the country at the wrong part of the year.
You're not wrong.
Oh my God. Unbelievable. Well,
but yeah, I mean, So Tanner asked me this, and I don't know if I heard you talk about it with the mid on Thursday. What you think 26? I think, have you given out your prediction for 26? You told me about it earlier.
I did last night.
You did. So, do you think there's going to be any large pullback at some point?
I think there's going to be periods of retracements. I do not think we're going to get a big pullback. I think
Not a
that
20% boy or anything like that.
no. I mean, I've been pretty spot on with a lot of things this year, including where inflation's going and rate cuts and target prices and the market bottoming. And I got to tell you, there's not a lot of things that get me worried about 26 unless there's something that comes out of the blue that we just can't handicap for. The reality is that we have oil trading where I needed to trade between 55 and 65 to make input prices tolerable so everybody does well. So oil prices have also helped inflation go down. You have food prices coming down. We have unemployment, which is the one thing I'm a little worried about. But when we look at the Fed's economic projections, they're showing GDP growth across the board for not just this year, but the next 3 years. And if they're projecting economic growth each year for the next 3 years, it's going to be much harder for a recession to hit. And if a recession doesn't hit, this is a market that could continue upward for the next several years. When we look at where the big companies are projecting earnings to go, where they're projecting revenue to grow, I think 2026 can be a very good year. Maybe we get a 5 or 10% pullback. That would be healthy. I'm not seeing a bear market next year. There's just too good of a setup right now. And just because we're in too good of a setup doesn't mean that it's too good to be true. We know that we have a new Fed chair coming in. Maybe that causes some people to freak out and the markets to freak out a little bit. But over the summer, I'm expecting a new dot plot. I'm expecting 2 to 3 rate cuts next year. I'd like to see 3 rate cuts. I'd like to see rates get down to 2 to 2.5% in 2027. And in that type of environment, we're going to see a lot of companies probably issue new debt at lower rates, pay off higher yielding debt, reduce their interest expenses, expand margins. I think that, whoa, Derek Wall in the chat.
Much appreciated, Derek. Holy crap.
Gifting
there we go
50 Matt Money memberships to the White House's favorite quant, Matt Money.
I appreciate that. That was unexpected. Thank you so much, Derek.
Derek is a great guy.
Great guy.
Met him in person, great guy.
Did you?
Yeah.
I guess when he came to New York, because you don't leave New York, so.
Yeah, we went out to dinner. Yeah, I don't leave New York.
I was about to say, I was like, I met him for a good chat in Miami, but I was like, you weren't in Miami because you refused to hang out with me because you hate me. But I had to beg Steve to take an hour lunch to meet me. He was like shuffling down around days. And then when I met him, he was like, you remember that scene from Seinfeld, the George scene? Where he's like, you just have to act busy, and people will think, man, this guy's really. Where it's just like, oh, you just gotta. That was Steve during lunch, but he did get like 15 phone calls, so he actually was busy.
I was actually very busy.
He was actually very busy, but I'm very appreciative that Steve made it. But and also Derek, I'm very excited that I was able to meet you, man, because when I was in Miami, there was like 18 different people, like always occupying Derek's time, and I'm glad I was able to hang out with him for a good 15 minutes or so and hear his story, and excited about his upcoming business. So
yeah, great guy. So short, make the story short, I think 8,000 on S&P is attainable in 2026. That would not be a crazy move. If we hit 7,000 this year, which I think we can, think about it. Just a 10% uptrend would be 7,700. So I don't think 8,000 on S&P is that crazy if we get to 7,000 this year. We have a lot of firepower on earnings. We have a ton of backlog with big tech, and we have a lot of visibility into forward revenue from the infrastructure companies, including Broadcom, Micron, and Nvidia. So I do think this is going to be a very good year. It's also a year where something may happen that we have not seen many times, and it is big tech rallying along with the broad market. I think both things can happen in 26, where we get the companies that have been lagging, call it the bottom 450, because it's not the bottom 493 that's lagging. There are companies in S&P that are on fire that are outside of the top 10, AMD, Palantir, et cetera, et cetera. I do think that we can get the bottom companies to rally while big tech continues to rally, and that can push us higher. So that's what I'm seeing for 2026.
Mm.
How about
I mean,
you?
I wanted to start the stream, but I got sidetracked because I was making my coffee. But I wanted to start the stream with you lied to me because you promised me that we would be 2.5 to 3% higher by the end of the year. And I don't know, Steven, are we only got 10
Listen,
days left.
we still got 10 days left in the year. It ain't over yet, buddy.
Because where we got to? Have we got to 69.50 yet, or have we not? I'm trying to remember where we got to on the SPX.
So we got to a high of 69.20. We were almost there. And everybody called me crazy in April when it was at 48.50.
Yeah, 69.20.
And I said that we were going 7,000. I was one of the only people that was saying that.
We got 2.5% to go, Steven.
We did.
Are we gonna hit it?
We do.
And to me, let's be honest, is 69.50 7,000?
No, it's not.
Oh, okay. So you're playing Price is Right, but to the upside. It has to be above.
I mean, 7,000 is 7,000. You don't hit it unless it hits 7,000. I mean, it's a rounding error, but still, it's not 7,000.
I mean, okay. So we got 2.5% to go, Steve. I'm glad you stated that because I just want to make sure that I don't come on a stream and it's 69.50. I'm like, Steve, you were right. I can be if it was 69.99.
Still wrong.
Like, Steve, you lied to me. That's what I'll say.
It'll be Steve was incorrect.
That Friday when it market opens, if it's not opening above 7,000. Now, silly question. What if it hits 7,000 and then comes back down to 695?
Then I'm correct because it hit 7,000.
Okay, so you're saying it just at some point it has to hit 7K.
We are hitting 7,000 before the end of the year.
It's not the SoFi rules that I have with Tevis where it has to maintain.
We never 7, put a stipulation on that. I said I think my exact words were the S&P is going to 7,000.
Okay.
We'd have to look at the tape. I don't exactly remember what I said, but I do believe it was we're going to reach 7,000 on the S&P.
All right. Not very good. Excited.
I'm excited too. I mean, I think that this is going to be really good for the market. I think the markets are going to be really good next year. I would like to see things normalize. I think we need a rotation out of high beta names into more quality. I think there's a lot of companies that it doesn't make sense where they are. Mm-hmm. New one that I have not talked about live on stream. I was looking at Bristol Myers again, and it don't make sense. Just saying.
What was the one that I was looking at in that particular space? Yeah, I'll have to double check, but I know Chris P and I were talking about it a few months back. I think STWD is not a bad one either.
I just bought more.
Did you? I have some puts on it because my thought process is worst case scenario, I get put the shares and I'm making an additional 10% of my money. I forget what I put them at. I think it was like $20 or something like that. So, I mean, we all know it sells or each share is 48 cents every quarter. So it's just under $2. It's what is that, $1.92, Steve, a year in dividends per
It
share?
is. It's $1.92. It's over 10% dividend yield right now, yield on cost. And every time it gets below 1850, I start adding again. I really like STWD. I think Barry Sternlich is one of the greatest CEOs in the REIT space. And it is something that I have owned for a very long time and I will continue to own.
Mm. So you're thinking that because let me see if I digested what you stated appropriately, because I don't want to put words in your mouth and I don't want to think that I agree with you or not if we're on differing pages. You're thinking we're going to continue to see some strength in the large seven tech names, but that also coupled with the bottom 450 that have kind of lagged behind to actually catch a bid, and people actually realize, hey, as interest rates are lowering, some of these other companies also have value, and he shouldn't just be focusing on this mag 7. There's a whole laundry list of names that have gotten super cheap over the years because people haven't been concentrating on them, and it's now time for them to also catch a premium, where right now they're probably trading at less than expected premiums. Is that what I'm kind of hearing you say?
Yeah, for the most part, I would phrase it as the first half, exactly what you said, but the second half, that the bottom 450 will likely experience productivity gains from AI,
Mm.
which will help increase margins, in addition to being able to issue new debt at lower prices and lower their interest expenses, which will also expand margins, which should have positive impacts on forward earnings, which should make them do well next year. I think this is a market that can rally all together, not one segment here, one segment there. And financials should do pretty well because I think originations are going to be huge next year, in addition to a housing market starting to come back.
Mm. That's one thing I've actually thought about as well, like in the long term, because people are talking about AI and uh, obviously that being a potential impact to um, all types of businesses, disruptors like HR and things like that. All that going towards something that you can kind of upload a policy, and that policy then being upheld by AI rather than an individual, let's say HR personnel. Um, so that could kind of be outsourced, and I've started to see companies do that. My thought then goes to what are things at the moment. Keep in mind this is maybe a 5 to 10 year window, but we haven't gotten to the place yet where robotics is sufficient enough where it can do detailed plumbing or electrical or what have you, because the hand movement, and this isn't my idea, I mean this is just something I'm listening to, the the movement of hand, of being able to get very particular about hand movements and being able to say do small electrical work, etc., that I've heard is going to be a premium at least for quite some time for future workers, because AI can't solve those things right now. And so I'm kind of curious if eventually, not only that, but with data centers growing as well as this residential continuing to be what it is, if electrical and plumbing services companies that are on the market will also catch a bid, because obviously you're going to need a lot of electrical work for these data centers. You're going to need, and so some of them have already started to kind of show the backlog associated with data centers. And I'm curious if, with all this capex that's being spent, if that's the beginning or if it's going to continue to grow going into the 2030s and beyond. And if that's the case, then there's a couple companies out there that might actually be worthwhile picking up that are already profitable. It's not like they're speculative, right? We're talking about electrical, we're talking about plumbing companies. And so my curiosity is if those will be good places to potentially get money as they focus on bigger contracts and hyper focusing on data centers. So I don't know.
I think that we got a lot of glimpses into where the revenue backlog is throughout the entire stack. And it's not just infrastructure. Yes, we have chip backlog, ran back like Micron was an incredible earnings call. It's across everything because we're seeing when you look at where Microsoft and Alphabet showed the amount of people utilizing Copilot and Gemini, this is really starting to fire on all cylinders across commercial and consumer from AI. So I think that this is something that's going to get monetized throughout both back end and front end. So pretty interesting.
I'm gonna see where people see the SPX at year end 2026. What do we think, Steve? We only have 4 options. So should we say less than 7,000? Should we say less than 6,500? Less than 7,000, or say maybe greater than 6,500, but less than 7,000. And then say greater than 7,000. And then you're saying 7,700?
No, I'm saying we can get to 8,000.
I say, okay, so greater than 8,000. So I have less than 60. I'll just say less than 7,000. Greater than 7,000, but less than 7,500. You're saying 8,000, or do you want to say 7,700?
No, sticking with we're going to hit 8,000 next year as long as we don't have a black swan event.
Okay, so greater than 7,500, but less than 8,000, and then greater than 8,000 start poll. We'll see what people say, Steve. We got 100 people on my chat. If anybody wants to participate or you want to copy that poll, Steve, then feel free to.
I'm actually bringing up on mine. I'm going to run one also.
Kind of curious where people. Steve, we only have 5 votes so far. I'm about to say you.
I'm doing it right now.
All right, we got 11 votes in. I think people are agreeing with you, Steve.
What were the choices again?
Mine. So feel free to tailor it to your audience, but less than 7,000, and then I said greater than 7, but less than 7,500. Well, now people are changing. Now
You're making this so complicated.
Well, option 1 is less than 7,000.
We're going to do 6,500, 7,000, 7,500, and 8,500, and 8,000. Make it easy for everybody.
Yeah, I'm not the smartest, Steve. That's why we have you.
6,500, 7,000, 7,500, 8,000 plus.
That's about what I have, yeah.
7,500 is in the lead right now, ladies and gentlemen.
It's a tie. It's almost a tie between greater than 7,000 and less than 8,000 for us over here on the White House Quant channel.
How much do I need to pay you to change your channel's name to the White House Quant channel?
No, I mean, the 15 minutes will die eventually, and I'll just be back to Matt Money.
Just be back to Matt Money.
Some people are already tired of hearing it. I heard when we were talking about it, people were like, "Let's move on." And on my side, so.
Oh, it's hilarious though.
Like, I think it's hysterical.
It's a joke, everybody. It's a joke.
I appreciate that. Somebody said my options video was great. I appreciate that. Yeah, I do have. I don't remember what it's called. It's Options 101 or something like that. But hey, I straight up, Steve, I don't know if I told you this. I haven't said this live yet, but I cannot confirm nor deny that I'm being considered for the Fed chair position.
You know what? I think I heard a little rumor about that.
Just saying.
I heard a little rumor.
Somebody said this is a great wood ceiling. This is why we bought the house. And the paint was not perfect, but my sister said, look past the paint. You could change the paint, but you can't. I mean, you could change this sunroom, but The sunroom is why we bought this house. It's definitely one of the centerpieces.
All right, we have 153 votes so far.
Hey, where are
We're
you
going
guys?
to close the poll in about 30 seconds, everybody. So please vote.
Yeah, I got 67 votes, so we'll have a good view on the
Please
polls.
vote.
We hopefully get close to 200 votes, is what people are thinking. Oh, Mitt's saying it could correct. I think there could be a correction in the second half as well, and that's not atypical of a midterm year. I think there will be a 20% plus. People are saying the only vote I care for is Matt 2028. I did, Steve. I'm curious. While we're waiting before we close this poll, I did think about with the Daily Mail if they asked me like what were those 8 minutes if I were to have said whatever I wanted on the White House Live. I didn't, because I had no idea that it was being streamed. Had I known, what would I have said differently? I would have kicked off my 2028 presidential campaign, and this is actually me reaffirming that I will. So, I mean, I will gladly, if I will take a VP ship if Vance wants me to be a VP, but I'm eligible next year, 35. So, big 3-5. Your boy is eligible to put his hat in the ring.
I like it.
I could take down AOC. I would probably get within the first debate or like anything. I would probably say something that I should not, and I would immediately get booted.
Well, we're going to end the poll.
Yeah, let me add mine as well.
I have 221 votes.
Oh, wow.
The number one answer was 7,500 at 43%. 27% say 7,000. 23% say 8,000 plus. 7% say we're going lower, 6,500.
I have 81 votes, so slightly less than yours, Steve, but greater than 7,500, but less than 8,000 is where we topped out. So that was about 43%, and then it almost was the same. 41% said between 7,000 and 7,500. So regardless, I mean, you're seeing people thinking we're going to be positive next year. Anywhere between 10 and, or I guess anywhere between 0 and 8,000 would I guess be 13% year over year. If we go to 7,000 to 8,000, let me see, 8 divided by 7, 14. So anywhere between 0 to 14%, people are saying.
Pretty wild.
10% of people think we're going to be greater than 8,000. And then some people think there will be 6% of people think will be less than 7,000. So I think our groups align pretty closely there, Steve.
We'll see. I mean, look, it is a midterm year, but I'm not scared of the midterms. How about that?
I like it.
Here's why. If we get deadlock, that's actually the best thing for the market, believe it or not.
Always is.
Always is. So if one side loses something and one side gains something, but the other side keeps something, deadlock.
The SP 500 lost 500 points in a single day. Did it really? I never realized that.
What?
But again, yeah, it sounds right. Somebody said that the S&P lost 500 points in a single day in April. But yeah, I forgot about that. But yeah,
it's all good.
Interesting. Are you this believer in 2026 that we'll see a large shakeup in the Mag 7, or do you think everything's going to be kind of even keel?
No, I'm not. I don't think we're going to see a large shakeup.
You don't think Palantir is going to come out of the woodwork, Steve? I'm just kidding.
I think that the big companies are just going to get bigger. I don't think companies are going to – I don't believe new companies will enter into the market caps of the Mag 7. I think what happened with Broadcom was an anomaly that it should have never gotten to where Meta is. So we'll see.
You know what I wasn't expecting? I mean, I'm actually kind of surprised it's not, although the price to earnings is getting very rich, because it's kind of turned into an Amazon-like play because of its business model change.
But hold on.
Oh, there it is.
Eric Wall, once again, gifting 50 Stephen Fiorillo memberships. This guy is just a great guy all around. You did not have to do that, Derek. Thank you very much. Matt and I both appreciate it. All the support. Thank you. And next
Derek,
time
are
you're in
you?
New York, let me know.
Yeah, I was gonna say, are you gonna make it for the New York meetup? I don't expect you to change your schedule, but it would also be awesome to see if by happenstance we can make that work. The company I expect to hit 1T next year, Walmart.
I hope not.
Why not?
That would be insane.
It is trading rich, so the current price to earnings is oh, Derek's gonna be there. Nice. Okay, this is awesome.
Wait, who's going to be there?
At the New York meetup. So we'll have the White House Quant, the MilkMan, and Derek Wall.
Nice.
And Amit. It's going to be a big event. It's going to be a big event. That's awesome. I'm excited. Okay, cool. But yeah, so it's trading currently a $912 billion market cap valuation at a 40 PE. So that would mean that they are generating. But this goes back to if how much capital they're putting in, because if they're artificially pushing down their earnings on a net income basis because all the depreciation. But anyway, let me just see. So 900 divided by 40, they're making about 22.5 billion a year. But I'd have to look at the cash flow to see if it actually warrants that, because maybe on a price to cash flow basis, it's like in the mid 20s, and then I wouldn't be that. I don't think that that's too crazy because they are growing. I don't know. I'd have to look at it in more in depth.
I want to see if what I have here is updated. It is not. I will update Walmart's numbers right now for you. I feel like I already did this, but I don't know where it was. It's so expensive.
Exactly. That's why I think that the earnings multiple has expanded. It's not brick and mortar anymore. And in fact, I actually agree that what Walmart is doing, although as a night owl, I liked going to Walmart at like midnight to just like do stupid crap when I was bored, but not steal or anything like that. But I agree. I think that they're probably not making that much money. So to have cashiers and all that, and where'd this fly come from? So to have cashiers and stuff like that are there 24/7, obviously eats into profit if they don't need them. Those cashiers could be help restocking shelves and things like that, getting prepared for the next day. But them utilizing the retail the warehouse footprint as something they could do to sell more quickly and compete with Amazon, I think is the most prudent way for them to go about doing business, because otherwise these Walmart stores have no use. So now you're almost double utilizing them as industrial warehouses where they can pick up the normal 9 to 5, go after the market. It's the reason why Walmart bought Amazon bought Whole Foods, right? Is to be able to have the local grocery footprint coupled with having other areas they could store stuff. It's just, Walmart probably caught on to that, and they bought Chet.com for I forget how much. And yeah, I mean, I think it's smart, very smart.
Well, Walmart, where it is right now, it just looks very expensive. Let me
Yeah.
updating this. I think Broadcom's the last one I gotta do. You know what? We'll bring it. Hold on. Let me do this.
Somebody's talking about Aduro. I don't dislike Aduro. The thing that I've had problems with Aduro Clean Technologies, and I've covered that in the past. It's been quite a while, so I will gladly eat my own hat out of ignorance because I haven't kept up with the company as much as I'd like. But I looked at one of their most recently quarterly reports, and they're not making steps towards generating excessive amounts of revenue. Yes, they're creating a lot of partnerships, and I believe the technology there is there and it works. And for anybody that's not familiar with Aduro Clean Technologies, it's a company that basically thought process is how much plastic and stuff we have in terms of uh, like waste product and stuff like that. What can you do with that waste product? And the actuality is that you can reconvert those plastics, which come from oil products, and reconvert it back into usable oil products. And the thought process behind that would then be you can then get rid of some of these plastics while generating energy. Um, so there's that kind of life cycle of what the business is all about. But I haven't really seen them make meaningful strides towards making greater revenue, and so it's tough for me to be like, yeah, um, let's go for it and go full both feet into something like Aduro. But I know a bunch of buddies that were just like me interviewing the group executives very early on in 2021, and um, they've done extremely well. They bought the stock, and obviously they've uplisted twice now. I believe they're on the Nasdaq, and have done well. But my problem is until I start to see them make that path, I'm okay if a company loses money. Don't get me wrong, but until I see them make that path towards actually growing towards profitability, it's tough for me to get involved.
Oti, thank you very much. I don't think you want to say where I see it going, but I think Palantir tapers off in 26 and declines a little bit. That's just me. I think it's overvalued. We'll see what happens. But Q4 is going to be the big one for Palantir because if they can't bust through, so I think Q4 is going to be incredible. If they can't bust through 200 with a force, just like they couldn't off of Q3, which was incredible, I think that you're going to see a midterm top. All right, Matt. Maybe Walmart isn't as crazy as what I thought it was.
Damn it,
At the
Steven.
same time, when I look at how much they're doing versus Amazon and the EBITDA, maybe it's not that crazy anymore.
Okay, so that's what I was thinking. I was thinking, so but the operating income's not great. See that,
No,
but it's artificially
but
pushed down like I thought with the net income. Yeah.
the price to cash from operations is not that much more expensive than Amazon.
Mm-hmm.
But price to net income, I mean, I care more about cash from operations than net income at the
Me too.
moment.
Yep.
Only because net income, you have different things with taxes that can be done, other things. But I still believe that Amazon should get a bigger valuation than Walmart and Costco. I really do.
The thing that's really a striking um, thing for me is the EBITDA margin, and I'm curious about if you were to separate out AWS from this, how different would they look? So if you just had the
Amazon will look
e-commerce
like
versus,
Walmart and Costco from the margins.
you think so? It would be that bad.
Yes. Yes. And that's the other reason. Walmart and Costco don't have an AWS. And while Walmart is making strides on e commerce, it's such a low margin business that I get it. It's a very stable business. At the same time, should this be trading at 40 times profitability? I don't think so. And if it is, I don't know.
But people want to know what you think, Steve.
I still think that Walmart and Costco are expensive. I mean, if you look at, hold on.
But looking at it like this, do you think that Costco is as expensive as you once thought? It has come down in price too.
Costco is still very expensive to me. Walmart
But on
may
a
not be.
price to cash ops, I haven't looked at on a price to cash ops. I know it's like a PE of 50.
Yeah, I mean, from where the analysts see their 2028 earnings for Costco, 35 times is expensive to me when Amazon is trading at 24 times 2027.
But what about from cash ops perspective? Because you and I both agree that
26 times versus 18 and a half times, that's expensive. Costco doesn't have the ability to pump out more cash from operations the way Amazon does.
yeah, I would agree. I wasn't saying you were wrong. I was just really curious. Because I know you're like me. I don't like to look at net income because it can be manipulated for one-off
Yep.
tax items. It can be depreciated.
Yep.
So I like ops cash because you get cash in the door. That's more important to me than net income, which you can be manipulated.
Yeah, and look, the cash from operations is what's used to fund the business, fund buybacks, fund dividends, pay back debt, make acquisitions. Okay. So that's why I care more about it. Pretty sure that's why Matt cares more about it. I also like looking at EBITDA, even though people think it's a scam profitability metrics, because it shows you what comes in the door that can be utilized to cover the actual operations of the business. Because the actual operations of the business, you need to pay your income taxes, you need depreciation, you need to pay your debt. I mean, there's several things. So I still believe the Mag 7 are undervalued. They have so much more forward potential than Costco and Walmart that I think there should be a re-rating in the market, and they should either flip valuations or companies like Microsoft should catch a bid and get an expanded valuation. Microsoft is one of the most complete companies we've ever seen. And I'll make the argument, and you're in business, think about it like this. Sure, you still need to buy groceries and go to either Kroger, Walmart, Costco, buy stuff on Amazon every week or every month, whatever it is. At the same time, people can scale back their purchases if they need to. Companies cannot get off Microsoft's ecosystem. Like, you need Azure. If you are already hosting in Azure, you're not getting rid of it. And if you're getting rid of it, you're moving to AWS or Google Cloud, but you have an implementation fee. You're still spending money. So you're not getting rid of that cost. You also need the M365 licenses. And for recruiting in HR, you need LinkedIn Premium. You need to spend the money with recruiting agencies, the ads on LinkedIn. You're not getting rid of Microsoft's infrastructure. So to me, Microsoft is a more complete company, and they do a hell of a lot more profitability. For them to trade at a cheaper multiple than Costco and Walmart is insane to me. Especially with
Do you
the
think
forward
it's just
growth.
because they're so big and you think that people are afraid to pay so much for a company?
Think about this. And I don't want you to answer, but your company, think about how many computers you have, right? When you upgrade, think about how many Windows 10 licenses are sold. You know what I mean? Like, think about when across corporate America and also across consumers, every new computer that comes out, companies don't use Apple. Like, let's be honest. Companies don't really use Apple. Apple is more on the computer side, a personal computing platform. Now, for tablets and for cell phones, yes, Apple's amazing. Companies use them. But the companies that I know of, they're all using a Windows-based operating system. Linux tried displacing it, did not happen. And Microsoft just has such a moat around their products that I do think that the earnings power is so sticky. It is just as sticky, you can make an argument, as a Walmart's revenue or a Costco's revenue. Just think about it. You're doing an EA agreement, enterprise agreement. you're doing EA agreements for the M365 licenses, and you're locking things in at a 5-year clip.
So what? Let's help. I don't know if you've come to terms with it yet. If you fully have described it, I need to write this down as well. So going into 26, what themes do you see? I mean, you talked a little bit about the 450,
Yeah.
the bottom 450. You talked about how you think it's still going to be a strong year for the Mag 7. I agree. I still think that there will probably be in the second half of the year some pullback. I don't think that we're going to crash or anything like that, but I do think that there will be some pullback in the second half of the year. So I'll stick to that for now. Is there any particular themes? Like for me, I would love to have something in robotics in my portfolio. Obviously, I'm sticking to the LNG theme because I think that a lot of people are starting to see cracks in a lot of other companies being able to deliver. So that whole supply glut in the late 2030, sorry, the late 2020s, et cetera, I think is starting to break down. And I always thought that that was going to be the case. And so I think LNG will come in strong. Henry Hub will do well in terms of being below 450 an MCF, but I think TTF and JKM throughout the year will continue to kind of increase as winter. We start to get into January, February. I think they'll kind of reverse, and I think they've already short-term bottomed. And I think with Russia, et cetera, really starting to cease not just delivery to the EU, but all of Europe, I think that'll help drive an additional amount. And I also think that the European gains that they think they're going to get from renewables are optimistic, and like apparently the EU thinks they're going to be able to use 30% less natural gas between now and the end of 2030 because of renewables. So I think that that's optimistic. I'll gladly be humbled if that's the case. But with all these delay in projects and Russia cutting off gas, I just think it's setting up the second half of 2026 to people realizing, oh crap, we actually need these incumbent companies in the United States for their LNG in the global trade. And so I think LNG will have a stellar year. Not LNG prices in the US, but you have to think the spread between European natural gas prices and US natural gas prices. So don't just hear me say the environment and think, oh, Henry Hub's going to go to the moon and buy like Boyle ETF or something like that, because that's not what I mean. It's all about the arbitrage between what you could sell it for in the EU or Japan or Korea or the rest of Southeast Asia, and what it costs for Henry Hub gas in the US. So unless you truly understand, then stay away from the trade because it could be quite detrimental if you don't fully comprehend. But so I think that that's going to set up really well, and we're already running at a pretty lean amount of storage in the EU. So I'm cautiously optimistic that my portfolio is set up for that. AWS will continue to dominate. Google, I feel like, is going to not perform as well because it has had such a run up. So I think I wouldn't be surprised if it flat. I don't want to say flat lines, but is not nearly as growth oriented as some of the others. I think it being up 150% in short order, can give it a little bit of time to let valuations kind of increase there. But I'm hoping Amazon really starts to realize some of these gains from robotics, because we've already started to see their ops margin creep up in a positive way, and I hope that it continues, because at the end of the day, I still think Amazon's lagging in terms of its valuation, and it's been sideways for quite a few years.
So outside of big tech, which is something that I constantly cite, I do think there's an opportunity in housing. I do think the housing market's going to get unlocked, and that's more of like a 2 or 3 year play as rates come down. I think QXO is going to do very well. I think there's some REITs that'll do well. I think there's REITs that are very undervalued because we're coming off the tail end of a high rate environment. And I don't think REIT valuations have caught up to it yet. And I think there's some that are getting hit harder than others. And while some are warranted, I think that there are some that are just following the sector down because of a fear about commercial real estate. So stuff like Realty Income, I think, will do well next year. They
And I want to
are
dive. I want to dive. Sorry, I'll let you finish. Sorry, I thought you were pausing.
no, just that those are really the two. And adjacent place stuff is like AGNC, but stuff that people really wouldn't think of. And then I do think companies like Coca-Cola can get a little bit of a bid, not a huge one, but I have to think that the large caps have the most to gain by AI because they have the balance sheets to implement it correctly and extract margins out of their operations. So I think we could see Procter and Gamble and stuff like that gain a lot of efficiency, which could be a big narrative. But to me, the more obvious stuff is REITs and housing.
Mm. And I want to ask about that real estate question because I thought that with this recent cutting that we saw in 2025, that REITs would actually start going in the positive direction. And knowing that we're going to be in a cutting cycle for quite some time, potentially cutting cycle until the end of 27, I'm surprised that I haven't, because knowing that markets are forward looking, I'm surprised I haven't seen them accelerate in terms of pricing. And I guess my question to you is, because you're a REIT guy too, so like I don't know if that's been surprising. So I want to hear your thoughts on that. And then second part of that question is, do you think the reason why it hasn't, and this is where I really want to pick your brain, do you think the reason why it hasn't is because we are still undergoing, it's only been 5 years since we were zero interest rate, and now some of these balloon payments that some of these commercial companies are having to pay are still coming up. And so even though they might be cheaper in sense of where we were, say, in 2023 when interest rates were at its highest, it's still higher than what it was during 2020. And so when you're refinancing these things, you're still not getting the deals that you thought. And so your weighted average cost of capital is still increasing, even though you're in a cutting cycle. It's not cutting to zero, it's cutting to potentially high fours, low fours, mid fours at its best. And so that's not anywhere like the 3% rate mortgage payments or interest rate payments that you were getting just 5 years ago. So I'm kind of curious. I'm picking your brain on all that.
So I got a very simplistic answer for you
Yeah.
because when we say it's a tale of two cities. So I'm going to share my screen because I don't have
Oh no, I'm out.
fiscal AI like the cool kids. Okay.
That you could.
Yeah, but I'm too lazy to reach out to anybody.
No, they should be reaching out to you, Steve.
They should be reaching out to me. I shouldn't have to reach out to anyone.
How many people you got on there right now? 1,000
What do you mean?
live, concurrently watching.
556.
And Fiscal's not interested in that. Riddle me that, Fiscal.
So it's a tale of two cities right now. So this is Simon Property Group and Realty Income. So Realty Income is the green, Simon Property Group is the orange. So on a year
for people that don't know SPG is like the major mall real estate owner in America. And then Realty Income is a lot of triple net, think corner stores like Walgreens and CVS and Lifetime Fitness, etc.
So on a year-to-date basis, they're roughly the same. Simon Property is up just a little bit more, 12.8% versus 11.6%. On a one-year basis, they're actually almost the same, but on a 5-year, completely different. Realty Income's up 26%, whereas Simon Property is up 187%. And this includes dividends, I believe, because when I look at this for Realty Income, I want to get off this view. What the hell? Hold on. All right, finally brought it back. Let me reshare. So on a year-to-date, Realty Income is only up 5.5%. Over 5 years, it's down without the dividends. And over the past decade, it's up 10%. Now we look at SPG.
And the yield's at almost 6%, Steve. Wow.
Yeah. So Simon Property over the past decade is down. But past 5
That
years,
yield too. Wow.
it's up 121%. So we look at coming out of COVID, Simon Property without the dividend is up 121%, whereas Realty Income is down 5%. Tale of two cities. Reason why this is, my opinion, simplistic answer. People have overblown the narrative about Realty Income's customers folding to e-commerce and folding to AI. A lot of people were worried about the Walgreens and the CVS's and this and that. And I think that is still a reason why you're seeing specifically Realty Income and NNN REIT not going up, because people are worried about, can their clients continue operations without moving full e-commerce. I think that's putting a lot of pressure. Will AMC still be here? AMC has space at Realty Income. Now, Simon Property, we went through that a while ago. Nobody is questioning Class A malls anymore. And I have written a lot of articles about it and how e-commerce is still less than 10% of the overall numbers spent in retail. And physical malls are much more than shopping. They are human connection. You have restaurants, movie theaters, other types of things, mini golf, et cetera, at Class A malls. People are not going to live 100% of their life behind a screen. They're going to look for human interaction and things to do. So to me, Simon Property Group was an easy play. I do think Realty Income and REIT will do well. I think we need rates to go a little lower. That way the narrative around their underlying tenants changes a little bit. Because I think that's what's holding them back right now. Nobody cares that Realty Income has a 98.7% leasing right now. Nobody cares that they've raised the quarterly dividend for over 100 straight quarters. Nobody cares that Realty Income continues to put out great numbers. So
you like real estate trusts going in?
I think it's a theme that can work as rates go down and as their tenants continue to remain solvent and that narrative dissipates a little bit. I think it's something that will pick up steam, especially with people looking for income. I mean, if you're looking for income and you got money on the sidelines, Realty Income at 5.5%, 6%, getting a monthly check doesn't look too bad with quarterly increases on the dividend.
And potential to grow your underlying.
Yes. I mean, look, one that I've been pounding the table on is Omega Healthcare. Been pounding the table on it. We have such a need for long-term care facilities and for skilled nursing facilities that I think it's something that will continue to do well. It's up off the lows. I think it's going to continue to do well.
I don't hate it. I don't know. It's I know I'm excited for lower interest rates. I mean, I'll be able to refinance the place I'm in right now, my personal home that I normally stream from. The place that's 2 blocks away from here. So I mean, it'll help my cash flow. That's for sure. So I don't know.
Yeah, we'll see.
Are they coming for you, Steve? What's going on?
Dude, it's New York. What do you expect?
In New York, Steve, concrete jungle where dreams are made of. Nothing you
What
can't
do you expect, man? It is a concrete jungle out there. Concrete jungle.
Okay, so real estate. What else are you thinking? QXO is the thought.
Let's take this one real quick. This is for you. Like LMT is Lockheed Martin, by the way, 100 billion market cap, 70 billion revenue. How big can Rocket Money actually get? Why is SpaceX so big and Lockheed Martin so small?
Lockheed it's a segmented industry. Yes, there's a couple key players, but Lockheed, Northrop, General Dynamics, all those companies have to split up a lot of pie. And unfortunately, or fortunately, depending on how you look at it, majority of that can only be sold to the United States. And if the United States decides to sell a portion of those, you know, Raptors or different fighter jets to different countries, then they have to be dumbed down, etc. Rocket Lab, I think, is in a better position than SpaceX in terms of being able to do more international work. So right now, what we've seen is a company that can really navigate geopolitical boundaries like I haven't seen before. So the company is launched for Korea. It's launched for Japanese companies. It's launched for American companies. It's launched for it will be launching for the European Space Agency. So it's now involved with the UK hypersonics program. So to me, there's like obviously SpaceX is 10 years ahead in terms of being able to be, you know, reusing their medium launch vehicle and now they're obviously on their heavy launch vehicle. So in terms of where SpaceX is at comparatively to Rocket Lab, you know, they're obviously ahead in terms of actually executing that business environment and also the Starlink piece, etc. So uh, Rocket Lab has noted that they want to replicate that sort of business model, not the consumer-based internet piece like Starlink, but have something of a similarity in terms of a constellation. But they'll be able to do it almost at a world scale comparatively to SpaceX, which is mostly, from what I'm understanding, 75% Starlink and 25% for whomever else can occupy it. So to me, SpaceX and what Rocket Lab are doing are different. I don't think that Rocket Lab's end goal is to go to Mars. I think if that's the goal of the United States, Rocket Lab will help. But I think what Rocket Lab is trying to do that's different than SpaceX, which I think in the short term, I think is going to be beneficial for SpaceX, but in the long term, detrimental for SpaceX and a positive for Rocket Lab. And this doesn't really answer the Lockheed question, so let me answer this piece in my mind, and then I'll rally back up for the Lockheed question. But in the long term, I think that you'll see a lot more diplomacy and work across boundaries that Rocket Lab will do, which I think will generate a lot of capital. At some point, I think that SpaceX, unless it gets controlled over by the common person as a public company, then I think this might change. But my thought process around before SpaceX went public would be they're going to do everything and anything they can to go to Mars. And if that's the case, they'll even sacrifice profits to be able to do so as long as they get to go to Mars. Now, I think as they go as a public company, unless Elon maintains control somehow, I think that that could shift. It could be very well that in the long term they focus on helping geospatial across geospatial borders, etc., to get as much money as possible as a profitable business. So, at the moment, it's like not every country wants to work with Elon. So you'll have a lot of those contracts go if they can to Rocket Lab, which in the medium term will be very beneficial for Rocket Lab. Rocket Lab also now has uh, an operated headquarters in Germany now as well, which helps create some of those laser terminals and receivers. Um, so it'll be interesting to see how that morphs over time because you also have this Australia ambition and hypersonic testing piece as well. So it's Australia, US, UK. That's been kind of a partnership since October 2024 to help share on the hypersonics piece to be able to catch up with um, folks in the Middle East to kind of create some sort of Iron Dome like defense system, not offense, but defense system. Um, so, anyways, to do that, what was the question specifically around Lockheed? Why is 100 billion versus why? oh, how big can Rocket Lab get? I mean, I don't really think Lockheed has a successful rocket launch company. The Minotaur, which I believe was Lockheed, it might have been Northrop, but the Minotaur was something that was launched at most once a year. They claimed that it could be launched like twice a year, but I don't think that they had the cadence available, and it was $50 million. Now you have Rocket Lab launching 21 times a year, as displayed just this morning at 1:30. They launched their 21st rocket for the year, and their cadence, I think, at this point, if you use the last 6 months as a proxy, can be upwards of 25 times a year if they're able to get that up and going. So I wouldn't be surprised if you see next year in 2026 potentially 25 to 30 launches coming out specifically around the Electron. And that's not even using haste. Haste, you're not even going to space. You're going hypersonic to test that. So I think that that portion of the business can ramp up on its own at a compounded annual growth rate of 20 to 30%, maybe even 50% in the shorter term. So to me, I think you'll have more volume because it's going to be able to be more digestible as well as cadence. And so the government, which has a shrinking budget, can't afford something like a Lockheed unless Lockheed can get their prices down. And unfortunately, at the moment, I don't think Lockheed can get their prices down. So you can do 5 launches with Rocket Lab comparatively to the 1 launch you were able to do with Lockheed just a few years ago, and you're getting 5 times the amount of research and data and testing. And so to me, it's a no-brainer why Rocket Lab would continue to accelerate while Lockheed cannot. But I also, at the same time, I don't think Lockheed creates their own satellites. They have to outsource a lot of these things. And so what does Lockheed do? They charge 20%, 30% uplift being a prime contractor, and they don't build a lot of their own things. And so to me, you're going to be able to get, going directly to Rocket Lab for the same thing, a much cheaper product, because Rocket Lab will be able to create a lot of those things and not have to upcharge, say 30, 40% on something that's already upcharged. So that's kind of my thought process. I think that Rocket Lab, for what I know today, can go to 150 to 200 billion. And I'm still trying to understand how big the flatellite business will be, because it hasn't been fully articulated what the constellation business will be. They're obviously competent at making satellites. They have the largest space grade solar company in the world now with Solero, the company they acquired back in 2021. Those things have been used in the James Webb Telescope, the Perseverance rover on Mars. You have a legacy of really good data points for the Solero company that's been now acquired by Rocket Lab. And so my question is I don't necessarily know what the Flatellite constellation will do. And that's a big kind of question mark at the moment as to how much money that can generate. Is it going to be $250,000 a year per satellite, or is it going to be $3 million a year per satellite in terms of annual reoccurring revenue? What they have demonstrated is, with the 2 most recent contracts for the Space Development Agency, is 18 satellites that sold for $525 million in the Space Development Agency Tranche 2 deal, and then just the deal that was signed the other day, $800 and some million for 18 satellites for Tranche 3, which I haven't even calculated the cost of that. Let's say it's 807 divided by 18. That's $44 million per satellite. I don't see Lockheed getting, well, I guess Lockheed did get some of those contracts, but I'm curious now that, and I think that's why you started to see Rocket Lab catch a bid the past couple of days, is because people are saying, oh crap, these guys can deliver and get contracts like the big boys, and it's eating their lunch. How much can you look going forward as to how much more can it steal from the Lockheeds, the Northrops of the world, when those guys are struggling to get to space at the cost of which a SpaceX or Rocket Lab can?
You heard it here first from the White House's Quant.
White House Quant.
White House Quant, baby. All right. And then Maddie, what comment? I don't think we made a comment about Boyle. I don't even know what Boyle is.
I did. Boyle is, I think, a triple leveraged natural gas, U.S. natural gas futures ETF, I believe.
Gotcha.
But I stated basically that, and I didn't mean particularly to attack that individual. Yeah, it's the Ultra 3X. My question or my statement around that was particularly don't buy into LNG stocks if you think one way, particularly about Henry Hub prices, because yes, Henry Hub is important in that equation, but it's not the equation, right? It's about spreads between Henry Hub and spreads between the title transfer facility in the Netherlands and JKM, the Japanese Korean marker in Southeast Asia. So if you were thinking that Henry Hub is going to go to $10 an MCF, then sure, go buy Boyle. You know, that's really your MO. Then go for it. But it's not, these LNG stocks don't trade off of Henry Hub and Henry Hub alone. It's a derivative of Henry Hub, and it also depends on what's going on in Europe and going on in Japan. And so you can't look at Henry Hub in isolation and try to trade BG or Next based off of that. And that was the comment that I had made. And yeah.
Gotcha. All right. Well, I'm still not buying Rocket Money, everybody. I missed the train. So
That's a shame, Steve, because
missed the
there's a
train.
lot of money to be made between $35 billion market cap and 150 to 200 billion.
I guess. So my question is, when are we going to see data centers on the moon?
On the moon, I don't know. You're already starting to see.
Or how about this? Data centers in orbit.
They already are.
Okay.
There's already Blackwell chips. I don't know about Blackwell. There's already NVIDIA chips in orbit being tested.
Okay. You heard it here first with White House's Quant. I don't know. We'll see. I think there's, for me, other things I'm interested in.
Let's see. Let me see if I can get some specifics around that question, because I know recently people. Let's see. Can you give me particular launches? So let's see. So obviously, yes, there's already GPUs in space, the International Space Station. Let's see. Astronaut laptops include GPUs for tests like rendering high 3D details, etc. But that doesn't seem like they're actually testing it in space. Commercial off-the-shelf GPUs offer with mitigation for radiation, have flown on various missions. There's the NVIDIA Jetson series, which have been used on small satellites and CubeSats for onboard data. Rocket Lab has launched a couple of the CubeSats in 2024 and 2025. They're now moving them to DiskSats, so there's that piece. So yeah, here we go. 2024, 2025, space hardened or shielded NVIDIA GPUs launched on rideshare missions for SpaceX. As of late 2025, the most powerful example is the StarCloud 1, which carried an H100, which is apparently 100% more powerful than the prior space-based compute that has ever been sent. So it successfully trained AI models like Nano GPT on Shakespeare, and they're testing that concept around. So let's see. The most recent mission was StarCloud 1. I think we just talked about that. It was on a Falcon 9. That's part of a rideshare bandwagon or transporter mission from Cape Canaveral. So it's a 60 kilogram satellite, which is a small refrigerator size, and that's currently in low Earth orbit, about 325 kilometers. It has run, this is a statement, has run AI workloads, which we just talked about. Then there was the earlier missions with the Jetson series. When were those sent? 2024. So there's an Orin NX launched on SpaceX. Okay, so the Transporter 11.
So, Maddie, question for
Yeah.
you. Did you see what Bill Ackman proposed?
I didn't.
How do you feel about this?
Sorry, I'm digesting. I don't think it's dumb. I think it's wise for. So I guess the question is I guess it's really up to Elon and the other folks, right? The Googles of the world who own 7%, and Sequoias of the world who own some, and Peter Thiel's who own some. I guess it really just depends on how much money were they anticipating on raising. Was it 10 billion? Was it 20 billion? I don't know what percentage are they actually going to float to be able to, because for anybody that's not familiar with the IPO process, I mean, what you're basically doing is saying, hey, we're making these available to the market publicly now versus privately, and we think it should be trading at X, and we're actually raising, let's say, $3 billion for certain things. Maybe it's just to get liquidity to sell your own shares. That's also possible. But generally, these people have a reason why they're going public, to either get capital up front and sell part of the business, dilute shareholders, but also to get liquidity so they can reinvest back into the business. Like for Rocket Lab, for example, when they SPAC'd, they got, it was like 900 or so $1 million blank check company that valued them at about a $5 billion valuation, and they ended up with like $750 million to be able to acquire other businesses. So that 750 million was used to buy the Solero, the solar company, the bunch of different other small companies. They bought like 3 or 4 big companies with the blank check that they had gotten. So if that's what, say, SpaceX wants, excuse me, is say $10 billion to be able to kickstart or accelerate the large Falcon Heavy / Starship missions and get that runway, then I don't see why not. But I guess it really all just depends on, can you get the 10 billion from private investors?
Oh, I think they could, but I think you're right. It depends on what they are looking to raise. The IPO market's going to be interesting next year. I mean, how many companies do we see IPO, and do we find out that the private markets have become massively overvalued? That's a fear that I have going into next year, and that could hurt my narrative about S&P 8,000, depending on what the IPO market is. If OpenAI IPOs at $1 trillion and it's not profitable, I have a big problem with that.
I think you're gonna. I think it's tough. The narrative has tailwinds and it has headwinds. I think one of the headwinds as well is crypto, and crypto I think is going to continue to have a drag on the market. I think you've been able to get a lot of these IPOs from, say, Circle, and not an IPO, but just a massive tailwind for Robinhood and Coinbase and all of them. And I think that that's going to be a headwind for a lot of those companies. Now, obviously, depending on where they are in the S&P, if at all, because obviously some of those companies aren't in the S&P and some of them just joined, that could be a headwind and drag down, and that could be a negator on some of the verbiage you used around getting the 7,700, 800, or 8,000 on the SPY, or the SPX rather. So I don't know, but yeah, I'm very curious to see how much capital they actually want to raise out of this IPO for SpaceX. How much? I mean, at that large of a valuation, I could be humbled. They could potentially reach upwards of 20 to 25 billion in cash for selling a very small portion of the business.
They could.
I mean, I don't know what the most amount money has been raised ever has been in an IPO. I don't know.
I have no idea.
I'll look.
I have no idea.
Let's see. Largest amount of capital. Saudi Aramco raised 25.6 billion.
Yeah, but that doesn't count.
Why not?
Is it on something we can invest in?
It's on the Saudi exchange.
Which one?
The Saudi Aramco.
Right.
Alibaba went public. I guess Alibaba is probably the biggest. It was 25 billion. All the rest are like Chinese or Japanese. So SoftBank, the Industrial Commercial Bank of China. There's a Hong Kong company. So I mean, it's not implausible. Saudi Aramco, they went 25 billion initially, and then they increased it to basically be able to get 30 billion. And if Aramco, I think was a trillion and a half. But no, here's some statistics for you. No IPO in 2020 to 2025 has come close to any of these. The biggest in recent years were between the 4 to 6 billion range. Medline, which just happened last week, was 6.26 billion. And then CATL. What's CATL, Steve?
I'm not sure.
The heck is CATL? That raised 4.6. I don't even see CATL. Over the markets. Contemporary Amperex Technology. Oh, it's Hong Kong. That's a $2 trillion Hong Kong market cap company. What's 2 trillion in Hong Kong dollars?
Couldn't tell you, man. That's
HKD.
something for the White House Quant, not me.
Okay, so it's 13 to 1. Or sorry, 13 cents to 1. So 2 trillion, so $200
Look
billion.
at this. We have from Amit how the stock market could correct in 2026 on his Substack.
I think he thinks he's better than us, Steve. But in this case, we know him as better.
Look at him. Look at him going on this.
Steve, you got competition, dude.
Look at him. Good for him.
Did he make those graphics?
Good role model.
That's Kalshi. Did he make this Google graph?
Probably.
Is Amit stepping up in the world on Google Graphs?
I don't know.
What did it say? What it said? It said who he got it from. Hold on, go up.
Chart by Dustin.
Dusty. Is it say who? Who's Dustin?
Everybody go read this, please. Amid Substack. How many people are following him on Substack now?
Not enough.
Not enough. 15,000 people plus.
He's got good looks, man. Look at those good looks.
He's a good role model.
He rocks the gold chain. I can't get that gold chain.
You need to get a gold chain.
I need a nice what is it? Silver cross. Rose gold. You know what I do need, Steve? I need grills.
Oh God.
I need grills. You know the yeah, I need some ice. There you go. That's the terminology these days, Steve.
So how do you feel? Let's answer this. How do you feel about the whole Netflix situation a couple of weeks removed? Do we feel that Netflix is going to get the deal done with Warner Brothers, or do we think Paramount's going to get the deal done?
I think in terms of simplicity, I don't think that the Paramount deal, I think it's too convoluted. You have to get so many parties involved. I think that's tough. I think that Netflix would rather go with a deal that they can guarantee. Or sorry, Warner Brothers would rather go with the deal that they can guarantee. And I think that Netflix has the capital. I mean, even though it's not necessarily cash, right? I think it's part cash, part stock. I think they feel more comfortable, and I guess as a as a company, I would look at what's best for my shareholders and what is more executable, right? So let's just say, for example, somebody wanted to buy this house. Let's just say it's $100,000 house. If somebody thinks, if I have like somebody that says we can get $150,000 for that house, but we have to get 8 different parties involved, versus somebody offers me 125 and it's one party involved, I'd probably just go with the person that has the 125 with one party involved. Unless for some reason I can get some guarantees from the people with the $150,000 offer.
So here's the big difference. Okay. So
I'm not very smart, so I'm trying to simplify it for myself.
no, I get it. Paramount offered $30 all cash. Netflix offered $27.75, a mix of cash and stock.
Mhm.
The $30 all cash deal is $18 billion more cash for Warner Brothers equity holders. And there's supposedly $6 billion in cost savings combining Warner Brothers with Paramount's assets. So
Who stated that? Warner Brothers or Paramount?
Paramount. Most likely they'll shut. I mean, I would think that they're going to combine the movie studios, et cetera, et cetera. Get rid of one streaming platform. The Warner Brothers board has told shareholders to vote for the Netflix deal.
Yep.
I don't think the FTC is going to let it get done. Netflix is so big that if they add Warner Brothers, they become the de facto place. I don't think that it's going to be pro Hollywood or pro consumer. I think that pro consumer puts Warner Brothers and Paramount together.
How much? Which one is the one that has the $3 billion or $6 billion breakup fee? Is that the
Netflix has $5.8 billion breakup fee, which I would say at this point, Warner Brothers is never going on the block again to be purchased. This is a one-time thing. You're in it for this much, pay the damn breakup fee. Tell them that you will give them the freaking additional money. Because if Warner Brothers chooses to go with Paramount over Netflix, they own Netflix, I think, $2.8 billion. So pay that $2.8 billion on top of what you're giving them on the 30 a share.
So if they go with Paramount, they only have to pay 2.8 versus 6.
2.8, but if they vote Netflix, but Netflix can't get the deal done through the FTC, Netflix owes them $5.8 billion.
What's Paramount offering? Just the 30 billion cash? No contingencies?
$30 a share in cash.
That's what I mean.
And I am saying that they should pay Warner Brothers fee for going with them, because if they turn down the Netflix deal now, since they've already accepted it, they owe them $2.8 billion. So they should pay that for them. I think Netflix need this. Netflix's content is not that good. But at the same time, they have over 300 million subscribers. This would put them around.
Honestly, as a selfish person, Paramount's been coming out with some good stuff lately, but
Paramount's freaking ridiculous is what they are. Their content's great. They got the UFC now. You throw Warner Brothers Media in there. You have all the legacy assets through Warner Brothers and Paramount. You have freaking HBO. It would be a true number 3.
Which for me, it would make my life simpler because with either one, because I have Paramount through my Walmart Plus subscription, which gets paid by through my Amex. Sorry, just giving people all the deets if they need it. You can get a free Paramount or who's the other one? I don't remember. But you can get a free if you
Disney?
get Walmart Plus. Yeah, and maybe it might be Disney. I don't remember. But yeah, you can get a free basic Paramount, which I like because I want to watch Landman and other shows.
How good is MilkMan?
It's pretty good, Steve.
So good.
Pretty good. Maybe I'm just biased because I like the oil industry, but
Billy Bob.
Billy Bob, he does a good job. But yeah, Netflix I think could really use the bump in IP. It really could. It's got some good stuff, but I don't think that I think that stuff, it's like it doesn't have, to me, it doesn't have the rewatchability of a lot of these HBO series. So either way, I'm winning, because if they go with Paramount, then I don't know, who knows, maybe they terminate their deal with Amex. But I get it for
What the
free.
heck? Okay, and this is why I get pissed at Netflix. The Recruit is such a good show, and they canceled it. It's not returning for season 3. What is wrong with them?
What's The Recruit? I can't believe you just said that.
You've never seen The Recruit on Netflix?
No, so don't bring up a trailer, but bring up like a
Dude,
IMDb or something.
like, I don't even understand. You're breaking my brain.
That's what I'm here to do.
Everybody in the chat, have you seen The Recruit? Please tell me you've seen The Recruit.
The 3-season Kicks of Death. That makes so much sense. No, Steve, am I dumb?
I mean, I don't understand how you haven't seen the show.
Thing yes, no, yes, no.
It's incredible.
Recruit is great. Have not seen The Recruit.
It's incredible.
I don't know.
I am shocked that a lot of people in the chat are saying they haven't seen this. It's a great show.
Luckily for me, Steve, I got a TV right behind me. You can see it. My upper right shoulder.
I wonder if the people in Netflix canceled The Night Agent also. They canceled this.
I thought you said that they did.
Did they?
I know you liked it, but I thought you said that you were frustrated with Netflix because they did. Maybe if I remember that you stated you'd be upset if they did.
I would be upset if they did. Hold on. All right. It'll be returning for its 3rd season, early 2026. Night Agent is a really good show also on Netflix.
Did you finish Stranger Things, Steve?
No. I'm boycotting Stranger Things. I think it's gotten progressively worse as it's gone on, and I have no interest.
What are you watching on Netflix now besides The Recruit?
Nothing. I canceled it. There's nothing I want to watch on it.
Then why do you care if they cancel The Recruit?
Because I was going to get it again specifically for The Recruit.
You're a gangster. I love it.
No, seriously. Like, here's my problem with Netflix, okay? And Netflix is the only one that I do this with. I can spend 30 minutes going through freaking Netflix and still go through things because there's nothing I want to watch. Any of the other streaming things, that does not happen with.
And that's a hard thing for you to say because you watch everything.
Everything. Like, I could go on HBO Max and I'll just rewatch Entourage, or I'll rewatch The Sopranos, or Silicon Valley, or freaking Oz, or True Blood. Like, there's always going to be something on HBO Max for me to rewatch. I go on Prime. There's always going to be something on Prime that I want to watch.
The thing that bothers me is, crap, I just had it on the tip of my tongue. Somebody said it almost verbatim. Not Mindhunter. What was it? I forget. Maybe it'll come back.
Guys, True Blood. Matt, did you watch True Blood?
I watched a couple episodes. It was pretty good.
True Blood was so good. So good.
Maybe that's what I do, Steve. I get, I need to use, I didn't know this. I forgot. So how they changed. Do you have the Amex Platinum or you have the Gold?
No, I boycott Amex.
Okay. They changed up the, what you can get, the benefits for having the card.
Yeah,
And
I don't look. I don't believe in paying for credit cards.
I
I
get it.
won't. I won't do it.
I get it. I think about it as well. Um, but yeah, the one of the perks is $100 in Resi. Uh, if you book a restaurant through Resi, they'll give you $100 or something like that. So I might just go and use that. I completely forgot that that was one of the perks this year, but I need to check out the local restaurants because if I'm going to recommend people, hey, here's I gotta do it.
Yeah, I mean, look. Here's my whole thing with Amex. Okay, I'm not paying you to extend me credit so I don't have to use a debit card or cash. You should give me free credit because every other company is willing to give me free credit. Like, there's nothing that I'm doing because I don't travel. Now, if I traveled, I think it would be a much different story with the lounges and all the other stuff where you can game it and benefit and make that
But we all know
annual.
Steve doesn't leave the U.S., so
But not since I don't leave New York, there's no reason for me to play that game. So
and it's $200 total for the year, specifically for this one perk. So I think maybe they gave you twice a year, but I don't know. My buddy told me it's $100 per time, so you can't do all 200 at once. You have to do it two separate times, so it's $100 each. But
But yeah, when it comes to Netflix, I can legitimately scroll through for 20 or 30 minutes and not find a thing I want to watch. Yet I can find something within 5 minutes on the other things. So that is why I will cancel Netflix. And then when a series that I actually like comes back, I'll get it for a month and watch it and then cancel.
Hot Steve, man, the myth, the legend.
So, did you watch Power on the plane? What's going on?
No, I can't afford a um, iPad, so
What you have an iPad? Don't mess with me.
I don't have an iPad.
Really?
No, ask Chris. He's been getting on my case in a positive way, constructively. He thinks that it'll help my productivity.
Dude, iPads are amazing.
I know you've been on the iPad trade for a while.
Long time.
I don't. I like a desktop. Like I have this
No, no,
laptop
no.
because I travel too much, but
No, no, no. I'm talking about just to have one for the couch or whatever.
I know exactly. But
Yeah.
like I'm more of a guy that likes to sit in front of a monitor at a desk, like you are right now.
But I'm not talking about using it for work. I'm talking
I
about just
know, but I'm just saying I don't like if I watch Netflix or something, it's at my desk. I don't go to a couch. But I also don't have a spouse. Like you have to spend
wait,
time with your wife.
wait. You don't watch Netflix on TV?
No, I have two monitors. I'll just do whatever I'm doing and watch
No,
on
you
the
gotta
monitor.
throw the Netflix on the big screen.
That's what I'm saying, Steve.
No, Maddie, we gotta fix this.
So that's what I'm thinking. Like I think when I go to this Resi thing, I'm probably gonna book something close here in South Jersey. Book something and then be like, hey, yeah, by the way, I'm only eating this here and I'm taking the rest to go and I'm just gonna watch TV behind me. Look at this setup, Steve. You like this? There's like a nice love seat right behind me. Then there's the
I do like
big
the
couch.
setup.
And I think that is there a chase line? Yeah, the chase line is still back there for
I
the
do,
for the for the youngins that like the eggshell chair. We got the eggshell chair.
I do like it.
I like this room a lot. It's even got the a fireplace back there for the
Oh,
winter.
nice. I like it.
A lot of people get upset when we don't have that on during the summer. It's like it's 85 degrees out. Why do you want a fireplace right now? We got the
Right.
bonfire. Maybe I can't take this thing that mobile, can I? We got a nice little bonfire thing out front for you, Steve. When you
I
finally decide to leave
mean,
New York,
listen, maybe we can.
best, literally the best sunsets on the East Coast. I'm not lying to you. Like you come, I'll send you a picture. The best sunsets on the East
Well,
Coast.
listen, maybe we can coordinate this a little better and meet up in AC.
There's no sunsets in AC, Steve.
I don't need a sunset.
So he's like, why would we see a sunset if I'm at the crab stable?
Exactly. Go get a nice big steak, glass of wine, go shoot some craps.
You know, maybe I do need to buy that place in Atlantic City, Steve, just for you.
I mean, I think you should just go to Atlantic City.
I am gonna try to see. I think my one buddy, he lives a couple towns north of AC, and um,
I'll pick a mid up on the way.
you tell me. You tell me.
Yeah, we'll figure it out.
As
I
much
mean,
as I would love to, as much as I would love to tell people where this place is at, there have been people that have found it.
we're not
Yeah,
doing
no, I know, but people are like, "Tell me where it is." It's like I love you, but there are people that unfortunately don't like me.
that.
So for some reason
We
or
don't
another,
need the FBI showing up and trying to figure out how Matt got on the White House's stream.
open up. But no, but yeah, no, there have actually been a few people that have found me and have rented. Like, oh my god, I follow on YouTube. This is great. And then I never hear from them again. They stay. They're like, I don't know if they're like hated it or what, but like they're like, oh my god, I can't believe I found you. They stay there, and then I never hear from them again. It's like the world swallows them up. Just go back into the void. So
Good role model. Good role model.
what are we buying, Steve?
I don't know. Maybe
All
some
right, if I had to
Netflix?
watch one thing on Netflix, I have HBO. I have Paramount. What am I watching?
All right. You watch Yellowstone?
I have not watched all of Yellowstone because I didn't have Paramount forever, and then I luckily when I had a trip to the UK, I watched the first 2 seasons because you have 8 hours.
Yellowstone is so legit.
I should finish Yellowstone.
You should finish Yellowstone.
Yeah.
Is what you should do. Yellowstone's amazing.
Did you like wait, which one's the newer one? 1923 or whatever? 1888 or 1887, whatever the hell that one is. I started that. That
It
one's
was
pretty
good.
Is there only one season of that?
I don't remember. You should finish Yellowstone and then watch Power is what you should do.
Power costs money, Steve.
Really? Really?
How much is a year subscription? It's like $13 or whatever.
I mean, really?
Let me see. I'd pay the $13 just to cancel it. Stars promotion. Let's see. There's like $1.99, $3 a month for the first 3 months.
Did you watch Industry on HBO?
I did finish the first season, but it was really good. I liked it. How many? It's up to a couple seasons now, right?
3 seasons. It's really good.
What happens in the second season? Is it
I don't
the
want to tell
second
you.
season?
You
But is
should
it worth?
watch
Is it worth the second season?
It's worth it. Do you watch Billions?
I've pretty much. I never finished Billions because it's off now, right? It's
Dude.
off.
How do you not finish these shows?
You're much more diligent about keeping up with stuff.
Dude, Billions was so fire. Stop what you're doing.
Billions was up to 7 seasons.
Go finish Billions, please.
And I got to where it just started getting like really good as well. Like,
What
sorry,
season
spoiler
did you
alert.
stop in?
Spoiler alert for the people that haven't watched. Like, they get divorced, right? And then it starts to like really dive deep.
Who?
They move
Chuck,
off-
Chuck and Wendy or Axe and Lara?
Oh, that happens really early on. Axe and
Oh, I'm
Lara.
asking who you're talking about with the divorce.
Chuck and Wendy, yeah.
Okay.
That's like, I feel like season 5, something like that.
4, I think. 4 or 5, yeah.
That's right. At the beginning of 5, I think, is where I got to.
Yeah. Oh, dude, go finish Billions.
How many
That's
seasons?
the number one thing you should do. Go finish Billions.
It is a good show.
It's unbelievable. Guys, the quality of Billions did not slow down. Trust me when I tell you, if you stopped at season 5, you need to go finish Billions. It is
Really?
that freaking good. Yeah.
It doesn't tail off?
Let's put it this way. A lot of people want to say Succession. Billions blows Succession out of the water. Blows it out of the water.
Because of how it ended or what?
Just so much better.
That's another one I need to finish. This fucking Succession. I only got through like the beginning of season 3.
I mean, I'm not going to
This is
bust
my
your
problem.
chops.
People will. This is where I start. I don't start shows. I wait for a couple seasons and then I binge watch it, and then I had to wait for the next season, and then the next season comes out and I forget, and then by the time it's like it's been a couple years and I don't finish it.
Yeah, I mean, Succession is worth finishing, but it's not as good as Billions.
Really?
You should definitely go finish Billions.
I feel like there's nothing new that's going to happen in Succession other than just the drama within the family.
It's just the drama. That's all it is.
Yeah. Because I think it's the biggest piece of drama I think happened at the end of season 2, beginning of season 3, I think.
Oh my God. Hail the Great. Beth Dutton is freaking amazing. Come on now.
What? I think she's great. Yeah.
She's amazing. They're actually shooting the spinoff with her and Rip.
I'm trying to remember. Is that the guy that she likes in the beginning of season 1 of 1883 or whatever it is?
Dude.
Oh no, I'm thinking of the actual Yellowstone. I'm thinking. Never mind. I'm thinking who's the blonde chick in 1883 or whatever it is. Never mind. I mixed them up. That's my fault. Are they really doing a spinoff with them? That's good. Yes. I like her character actually a lot.
She's great.
Because you see, how do I say it? This isn't a spoiler alert. You see, I don't want to say bipolar, but you see the two personalities, right? You see the inner child of her and her wanting to succeed, which leads to her and how she shows up in day-to-day life against people outside the family. And so I like how you get to see that inner child as well as, sorry, I don't know if inner child is like a formal term for writing, but you get to see some of that inner child and also how she's kind of seen externally. And I think it's really good.
I really do think that Paramount and Warner Brothers together is much better for consumers. After going over everything, it's just Netflix needs this deal, but I don't think it gets through.
These guys are acting like we've never seen There Would Be Blood, Steven. Now I feel disrespected. That's a joke, by the way. I don't actually feel disrespected, but
no bueno. No bueno.
Steven, I will drink your milkshake.
Can I just tell you know what I watched the other night? I watched a movie the other night. Did you watch the Underworld series?
Oh, only the first one. That was like the early 2000s, mid 2000s.
Yeah. With Kate Beckinsale.
Yeah.
So I watched The Rise of the Lycans the other night. It was so good.
Oh, you saying about Will, Steven? You cooking?
Huh?
What?
You
cooking? You don't remember that Dave Chappelle skit?
No.
Have you seen Dave Chappelle?
Once or twice.
See, now I get to bag
so
on you.
Overrated.
What?
So overrated.
You never watched all the comedy specials that come out?
No, it's so overrated.
You have seen them or you haven't?
I've seen like one. So overrated.
Okay. Maybe I'm just a loser, Steve.
No, everybody loves Chappelle except for me. Like my favorite comedy special is freaking Eddie Murphy Raw.
Then how do you not like Chappelle?
I think Chappelle's overrated.
You don't like his storytelling nature, or you like the
overrated? That's all.
Because he's a little bit removed from Eddie Murphy Raw.
Eddie Murphy
Raw is like in your fucking face. That's
like
a great.
You would not. He would not be able to make that today.
Eddie Murphy Raw?
No.
Really?
I don't think you can make that today.
I think that it borders. It plays that. I think it's very comparable what Chappelle does. He jumps over and across the line, but jumps back in very well. I think maybe I'd have to rewatch it again. I don't think the Dave Chappelle Raw is anything crazier than what Chappelle has done.
I don't know.
But I think maybe that's right. I think some people like Chappelle because it's more of like a storytelling than it is like jokes. And in Raw was like, anyway.
I mean, I've seen Rogan live. To me, Rogan's hilarious.
Dude, the Rogan, what was the special that came out a couple years ago on Netflix? That was great.
He's got some bits that are just incredible. His older stuff is so funny.
I don't know if I've seen a lot of his older stuff.
I'll send you one that is just incredible.
Dude, the one where what was it? It was like 4 or 5 years ago. It might have been pre-pandemic, where he fucking leaps on top of the bar stool that he's sitting on, like this as a gargoyle. It's fucking hysterical. I was crying.
He's hilarious. Him and Callen are hilarious.
Who?
Brian Callen.
Don't know.
You know who Brian Callen is. So you've seen freaking Hangover, right?
Yes.
Okay. You know when they go get married?
Yes.
Okay. Eddie from the Chapel.
Got it.
That's
Yeah.
Brian Callen.
Got it. Got it.
Hilarious.
You don't think Rogan is funny? Well,
Yeah, I think Rogan's hilarious.
Hermosa Beach 10 years ago. You're a good man.
What are you doing for dinner tonight?
I don't know. I got to check this resi. I'm full as hell from lunch. I had a really good cheesesteak. But I might go get some local restaurants because people always ask us, where to go.
You need to like leave a list of good places to eat. You gotta go do some investigation.
Well, this is the problem. So like I love my sister to death and we co-own this house and it's her dream. This obviously is not me. This is all her design. I'm just the guy with money that knows that when cash flows, right? Which this cash flows. So but she's like, you need to go here, you need to go there. I'm like, lady, you don't go out. Like you got 3 kids and your husband, has a sensitive tummy. God rest, love him, but they don't like to go out because, everything's got to be done well. Otherwise they get sick. So I'm like, you're just saying stuff. Like you're just using Yelp. Like you haven't been in any of these places. So I gotta be that guy.
You should be that guy.
So, I went to a good sandwich shop. So now that was for lunch. I got a magnet for it. I won't show you the other spot because it's nearby, but, so I got that and then I'm going to try to look for some decent spots to go out. And like I said, I'll probably order an entree, but then, order something to go. So that way I, have something for tomorrow for lunch.
All right.
And I don't have to pay for it, right? Because it'll be through Amex. So
there you go.
I just have to find a place to reserve. So,
I mean, I think it's a good idea, Matt.
You're a good man, Steve. That's why they pay the big bucks.
I think it's a good idea. Well, I think I'm going to go get some dinner.
Where are you going?
I don't know yet.
Chinese? American? What does boss lady want?
I don't know. Chinese could be good. Chinese could be good.
Little beef and broccoli by Steve.
What are you doing for Christmas? Are you doing anything Christmas Day?
Christmas Day, I'll be here with my sister. She's coming Tuesday. So I'm here today. Tomorrow, I should have done some more work and stuff at the house, but I didn't. But everything seems to be okay. I think I just need to get some water off the pool because of the rain. But other than that, everything seems to be in order. So
nice.
I'll ask my sister if there's anything else that I need to kind of do. There's not a lot of places you can do resi here, Steve. Might have to hold this resi off for.
I mean, what you should do is download the One Bite app and look for pizzerias Portnoy's given a high rating to down there.
Is there a website? One Bite. Let me see. Here you go. Find pizza. Search. Oh, here we go. Oh, is it search or can I type in area?
I know that on the phone you can just put your zip code in, it'll give you everything.
Shit, yeah. There's no much reviews. Leave a review. Order. Days reviews. Yeah, I think it wants me to download the app.
Yeah, why don't you download the app?
Damn it, Steve. Let's see.
Just saying.
I don't know if I have any space. I need to update my phone
Just saying.
or offload some of these pictures. I have a lot of pictures of Steve. He doesn't know, but you're a good man, Steve. Well, we can end it here. Appreciate your insights on the market going into. Can I ask a question? I understand. I don't dislike this, by the way. I like your thought. I should keep this magnet away from my computer. I like your thought on QXO, but QXO is all construction, right? So it's like lumber and everything. Do they also do um, electrical and plumbing, or is that separate?
I believe they'll be moving into that.
Is that part of your thesis, Stephen?
It's part of my thesis.
Stephen, do I have to go read your article on?
You should probably go read the article.
I probably should. You should probably post that link in the chitty chat.
Yeah, hold on. QXO.
When am I going to write another article, Steve?
Do you need me to gift you the article so you can read it?
I think so. I think I've lapsed my.
So for those of you, QXO is my pick for next year. It is my sleeper. I will gift Matt right now so he can read it unlocked.
I like to listen to it. For anybody that doesn't know, you can listen to these things in the car. And it does a really good job. It's probably made strides too, because when I first was doing it, I would listen to them. Like I'd play it on the how I do it. I'm not a good writer. And so what I generally would do is I would write a few paragraphs and then I would play it back to myself via some sort of text to speech, because thank you, Steve. So that way I can so I can hear it out loud, because the way I type, I think confuses people, because like I said, I'm not very intelligent. So and English is my second language, numbers are my first. So yeah.
Well,
Taking a second.
I think I'm gonna go figure out dinner. Maddie, you should figure out dinner too and finish watching Billions or something.
I think that might be the play.
Yeah,
So
appreciate everybody being here. I know we got a little sidetracked. Probably the first 80% of stocks got a little sidetracked with the White House's favorite quant. Please go follow at Real Money. If we get to, I don't know, 50,000 new followers, can we get your name changed, Matt?
Yeah, of course. Yeah, 50,000. I feel like I'd owe it to people, because at that point I only have 18K on YouTube.
I mean, I think we should say that if Matt gets to 50,000 followers, that he changes name to White House Quant.
White House Quant's pretty good, right?
I love it. I love it.
It's pretty good.
I love it. Well, everybody, hopefully you enjoy the rest of your Sunday. Thank you for hanging out with us. Got to go get some dinner, finish writing another article. Matt's got some work to do.
I do. I have to write up a new.
So maybe we'll stream again this week. We'll see.
I'm free. Yeah, the majority of it. I don't know if I'd be able to use this particular location, because I might have screaming children, unless it's late at night. But generally when the kids are down here, they don't go to bed until 10. So I might have to be seconded to the pool house.
June, maybe. Let me see what I got going on. What time does Amit normally go on? 7:45?
I think so.
Yeah, maybe. Well, let's say.
Maybe it doesn't even have to be that long. Maybe just for half an hour. Steve.
You want to come back on at 7:45 for half an hour?
I mean, I'm not gonna say I won't do it.
I mean, I will if you will.
I'll do it. It would be nice to
Alright.
see your beautiful face.
So
And,
if Amit's really not going live, I guess Maddie and I will.
No, I don't have kids. My sister's coming down on Tuesday. She has the kids. My nieces and nephews.
All right. So I'll set up a link now, and Maddie and I will be back on at 7:45. I'll probably just be like a 30-minute thing. It's not going to be long.
What's up with this Amit thing? You know, he's taking market closes off.
He has a life.
I might have to talk to him. He's getting. You had your talk with me, like Maddie. You're getting too comfortable. Where the Seeking Alpha.
Well, I mean, I still don't see a freaking Seeking Alpha article. I'm just saying.
You're not wrong, and Amit, I think if Amit is able to make 80% of what he has scheduled, I can't fault him. I don't show up at all, so it's very different, right? Like me not writing any Seeking Alpha, different than Amit not showing up for a futures, So,
I mean, this is true.
I'm giving him crap because I can, not because he actually deserves it. So.
Very
the guy
true.
The guy works hard. So if he misses a future stream, then I can't fault the guy.
All right. Well,
so hopefully you guys aren't like Matt was giving you crap. Like it's in jest. I'm not actually like. Yeah, I'll get the White House involved to be like, why aren't you streaming the futures? This is. Yeah, one stream on the White House, and I immediately have a different background.
All right, I'm making the thumbnail right now.
Ooh, are you going to show us live?
No, you'll see it. You'll see it. I don't even know how to get the future stuff.
Let's go to CNBC, right? Or CNN? Pre-market? Steve's been waiting for a girl like you.
All right, everybody.
Let me give people a little preview. Brad Jacobs is one of the most prolific industrial consolidators of the last 4 decades after creating an immense amount of shareholder value through decades of merger and acquisition activity to gain market share, streamline processes, and create efficiencies. Little teaser for your QXO article.
Just saying.
You're a good man.
Just saying. Brad Jacobs is a freaking...
Now, how'd you hear about QXO? Was that Hot Ken?
I can't talk about it.
You can't talk about it? Okay.
No, I can't talk about it. No, I know his background, and I know people that have invested in his prior companies, and they're very bullish on this one.
Very good. Cool, man. All right. Well, I'll see you at 7:45.
All right. Later.
2 hours, 40 minutes.
See everybody in a little bit. Thank you for being here.
Bye, Steve.
Bye, Matt.